The Camelback office deal we just did, one of our largest investments to date, a really exciting opportunity for us because it is a larger office building, which isn't really generally highly thought of.
So the Camelback office deal came to us from a good broker relationship from CBRE that we've known a long time, and more importantly, a repeat sponsor that we really respect. And so we were already looking closely at it. But it didn't take long to notice that it was an office. So the question is, how do we get comfortable with the O word, office?
It's an uncomfortable time to be doing office. At least it has been. And we've been sitting on the sideline watching. And so if you do office today, you need to feel really good about the location, the business plan, and the sponsors that you're working with.
We look at it and, it's interesting because a lot of these deals we see are with office or in rough shape. This one happened to be in great shape.
It's in our backyard. It's just right down the street. So we know the area really well. We know why people will office there. We know all the brokers who would be the leasing and sales for it. So we exercise those relationships to really get more information on it.
This opportunity made a lot of sense, particularly in office and easily accessible off of freeways. It's very rare to have it where you have so many amenities around. These were the exact things that we were looking for in an office product.
This is a refinance, so inherently we're always looking a little bit deeper. And the story here really made sense. They bought this before COVID in 2018, put in a ton of money in renovations. The occupancy was in the 60%, and they did an amazing thing of luring an anchor tenant over to the property. The cash flow going in obviously was very good, so we had more than enough for debt service coverage.
All those were really huge positives to the deal.
And so on a deal like this, we had to be able to move very quickly and then be able to provide certainty of execution, which was critical to us being able to win the deal.
We knew the sponsor very well. This is our fourth deal with them. They've all been offices. They've all done really well.
So while others may have actually been more aggressive in how they priced this, meaning they were charging a lower interest rate than we were, the sponsorship who we worked with before said, listen, we like how you guys work. We know you. We like how you execute. We'd be willing to pay a little bit more for that certainty and that speed and that execution that you guys exhibit on your other deals.
Because we had these relationships in place, it was a much better process where they could understand where we were coming from and we could understand where they're coming from. We could have better conversations and get to an answer quicker. Yeah, we're not the cheapest, but we are worth it.
And that was a huge bonus for us and a win-win for everybody involved.
I think it's one of our least risky deals because of the low attachment point, the high quality asset, the high quality sponsor, and then, the cash flow that the asset's generating.
Our borrower did a great job stabilizing the property. Now it's up north of 90%.
And it's got good lease term going forward.
It's a rare opportunity. I think we'll look back on this and say, geez, I'm surprised we were able to get that kind of pricing on that. But it is because we're following the trends, we're understanding where the flows are, and we think we're picking this up at the right time in the cycle.
We don't move in and out with the tide. We typically make our money and generate alpha by being a little bit counter where the tide is going. We think right now we're on the front end of a recovery in office, particularly in the capital markets for office.